going to be a very big battle between Elon Musk and Tesla. I believe that the two parties will definitely go for the kill. And Tesla or Elon Musk is thinking to me are part of this S&P 500 gang. And once they start to, if Tesla start to crumble, the rest will be affected. So imagine now the S&P now is held by these few companies. So once these few companies start to go down in value, I can tell you that the market will really sell down very, very fast. Do you agree with this statement? If you agree, press number 1 right now. Okay, I can tell you this is all right. When I saw Elon Musk want to be a party, want to get his own party, right, I can almost know that that's it. This is going to be the catalyst, really. Okay, this has been proven by thing. It's just like telling me like Gaddafi is all right, want to have his own coin, and then what happened to him? He got killed. When Saddam Hussein basically want to create his own petrodollar, got killed. So this is the same thing. To me, it's mutiny. It's crazy. All right. So this is one big problem here as well. The market breadth is so big right now. Okay, put that away. Look at the bond market. I told you guys that once the bond market comes out to the moving average here, definitely there will be resistance, truth be told. Next thing, look at the bond market. The volume is ridiculous. The volume was heaviest when it was going up itself. And that means the boys actually took the advantage to sell the bond. Now, of course, you say, KEL, wait a minute. The bond price goes up, the volume goes up. So that means it's good, right? Come on, guys. You're kidding me? Look here. Look here. Look at the bond price when it was surging up to 194. Look at the bond volume. It's even more than the one we're having right now. Did the bond market go up? No, the bond market crashed. The bond market crashed. So that is my point. I'm telling you this. This huge volume was not a buy signal, it's a sell signal, because every transaction is always a buyer and a seller. Yes, a buyer and a seller. So the thing is right now, right, I am very confident the next few weeks, the bond market will be coming down. Why? Because it's very clear. They pump the money to the stock market. They pump money to give it to the bond market. That is why the yield shoot up. I'll explain to you shortly. Yeah, let's take a look. Now, look at this right now, right? This is the bond market over the course of time. Now, the bond market now is now at the 59th month, the longest drawdown since 1976. Yes, the bond market has never been so badly down for the last 80 years, okay, last 50 years. Okay, so, and this is not going to help. It will still continue to fall. So you may say, KEL, then the bond market crash further, then what does it mean? Well, very simple, right? The bond market now is a market whereby if people want to support the US government, they'll buy the bond market, right? So the thing is why the bond market price coming down? Because people don't want to support the government. No people wants it. No one want to buy the bonds. Even the yield is at 4% or even 5%, so what? People don't want. So when the bond market will tell you the truth of the US economy right now. So that is why the bond price is coming down. So last Friday or last Thursday, the yield shoot up. Now, why the yield shoot up? Because the bond price came down. Basically, it's all right. They need to get more people to buy the bond. They must push the yield higher. So when more people sell the bond, the yield will automatically adjust to go higher to attract more people to buy the bonds. But you can see that itself, the volume from the bond market is not showing the same thing. So the thing is right now, I can tell you this, the next few days, watch out for this. The moment the yield, if this 10-year yield start to go past 4.4%, right, it will smash up to 4.55%. Now, if that really happened, right, that will easily smack down the S&P 500 by 150 points. So by the time this happens, the S&P will be dropped by at least 150 points. Okay, so mark my word on this. If the yield does push further to 4.55%, the S&P 500 will be smacked down by 150 points. Yes. All right, Benedict, anything to add on here yourself? Do you agree with me, and then now? Okay, yeah, thank you very much. All right, and this is not the end yet, guys. We still got lots to go, guys. This is only the halfway mark only. I tell you that only the halfway mark. There's more juicy stuff coming in. Now, it's not because that today I am very bearish. I gather all the bearish thing to talk to you. No, no, no. I'm being very consistent here. I'm telling you now this. First, we will have a big sell-off market. Then we'll have a very massive rally later on. Yes, stock market will shoot up, Bitcoin will go up, gold will go up, crude oil will go up, everything will go up. And then what happened? Massive inflation at the end of the year. Massive inflation at the end of the year. But this inflation will not kill the stock market because it's orchestrated already. So that's why now, guys, remember I told you this in my YouTube video about 6 months ago. I said that, right? By June, July period, I will come back and tell you when is the best time to short the market, then buy from the bottom. I already said this in my video, so check my video on YouTube. I said the time will be somewhere between June and July period, and I never lie. I always remember what I say, and I'm coming back to show this right now to all of you, yeah? Okay, so now everybody, you should know that this is the 2-year yield, okay? 2-year yield is a very close, sensitive, it's a very close thing to the Federal Reserve. The Federal Reserve will take this 2-year yield like a very good barometer for themselves, okay? So everybody take a look at this. Now, take a look. KEL, I don't understand. You are saying that there will be a yield going up, right? I said, Then, but this 2-year yield, right, as you can see, it only goes down, and then when it goes down, that will create the so-called recession. So I don't understand. How can you tell me that the yield will be going up one moment, and then you see the recession coming in? That means you didn't understand what I've been saying. Let me just address this to you. What did I tell you? I told you, right, there will be, the yield will shoot up because the bond price will crash. Okay, that's part one, yeah? Then after that, because the bond price crash, the US will not be able to get the money to pay off their debts. Agreeable? So by the time this happened, that will be between July to August period. So when this thing happened itself, the stock market will panic like hell. The stock market will sell down. Agreeable? Following me now? And when that all happened itself, right, the Federal Reserve by September will come in to save the day by printing and print and print. So when they print itself, right, the yield, the interest rate will drop. And that is where we will see this happening. The yield will drop frenetically. And when the yield drops frenetically itself, that will push us even closer to what we used to see, and that is called the technical recession. So when that happened itself, right, the stock market, okay, after coming at low price, the big boys will all come in to buy as much as possible and conquer the world in that way. That's the reason why until today itself, right, this our dear friend Warren Buffett has been buying a 3-month, 6-month, 2-year bond. He don't buy anything beyond the 2 years anymore. He just concentrate on this because he's just basically gearing up and making money off the US government. He knows that I can get paid 3%, 4% per annual result or per period itself. Why I need to bother pay the stock market? So what he's waiting for is for these high fruits to drop to the floor, and then he can massively buy all the low fruits. Do you understand my point now? This is a game the boys are playing in preparation to conquer the world. And I can tell you this, Donald Trump is part of this. He's not an idiot. He is very clear on what to do. He's following the textbook and how to profit from this. And that is why he created this genius plan. Genius is the one that's been created recently, right, for the stable coins. I tell you this genius coin, this genius plot itself that he created is very smart. They basically want to make everybody digitize, and then after that, use it to clear off their trade deficit. So all this thing itself is just part of the big plan. And you don't see right now, right, what will happen is this, you will be selling at the low later. And then after that, you see the massive rally that you're going to miss it for the next 1.5 years. So this one, please don't forget. This is going to be very important to you. So that's why to me, it's a very straight flusher. I know that this will happen the next 3 months. This 2-year yield will drop below 3% later. It will drop below 3%. And then when that happens itself, right, the stock market will panic. But then that is time to buy already. That will be the time to buy massively onto the stock market and, of course, your Bitcoin at the same time. That's the reason why I want to go Vietnam. That's the reason why I go Thailand. That's the reason why I'm doing China now. I'm seeing this like a very big, easy book to read. Once our thing is ready, once CRAZII is ready, and the market is right, wow, we can do a lot of things together. You know that? So you can see right now, right, the last 35 years, okay, every recession is always created or started by a violent drop in the 2 years yield. Now, this is clear. This is back in 1990s all the way. Every time when there's a violent sell down on the yield, the market will go into a recession. And then after that itself, right, you will see the thing breaking and so-called the Fed lost control. No, the Fed is not losing control. The Fed have been there for how many years? Since 1929, the Fed have been there. Do you think that they are stupid? No, they know what to do. It's just that they're playing dumb. You see, if I have a customer called USA who literally gets stupidly involved with me, okay? So, of course, I will suck their blood until it get bone dry, then come back again, right? So this is how the Federal been doing this. That's the reason why the US deficit from 1 trillion to 10 trillion to 36 trillion now to 50 trillion is very clear. They are just literally sucking dry the Americans. Yes, it's like that. If you are a corporate with Federal Reserve and you are making 3%, 4% every time itself on 36 trillion dollars, that's $1 trillion per year. My goodness, what type of money is that? That's ridiculous itself. What's the symbol to show S&P 500? Well, there's a lot of symbol, depends on which broker are using. So if you're using AIMS broker itself, it's S&P 500, SP 500, yeah? Okay, now more to go, let's continue, yeah? So now, why am I concerned? It is the same. Look at the delinquency now. Delinquency are people who get bankrupted, okay? And you can see right now, oh my goodness, the US commercial mortgage-backed securities now, or the CMBS, has surged to 11.1%, which is the all-time high. Oh my God. We are talking about year 2000 to year 2025, and where are we right now? We're the highest ever. Come on, man, guys. The last time we saw this itself was back in 2011 and 12, and that was where the market crazily smacked down. So again, this is happening. So this is the best time for us to take advantage of this. And of course, right now, because the cost of living is so high, this is the worst level in the last 35 years. No way an American will be able to pay for their mortgage debts. And the interest rate is still at the high itself, it will be an issue. So the question is this, but KEL, didn't you just say the yield will be coming down? So if that happened itself, what will happen? No, you must understand this, the bank doesn't work that way. The bank don't adjust the rate immediately, even the central bank may close it, right? So there will be a push button very soon. There will be a foreclosure again. I repeat, there will be a foreclosure again very soon to hit US. That means they will close off those people who cannot pay for it itself. Yes, it will happen. Because you remember this, it happened right here in 2007, where the market ratio was at 38, 39. Today, we are at 40 already. So that means that it's going to turn in very soon. So once the thing has to turn in itself, right, the whole thing will just collapse. The price, once the prices of the houses have to collapse, right, people cannot pay anymore because the mortgages is too expensive. Then what happened? Pump, pump, pump. The thing will just come down. So I can tell you this itself, right? All these is actually part of the whole thing. It's a repeated cycle over and over again. Will Singapore property be affected? It will, but not very badly. It will be affected, but not very badly. Why? Because you must understand, Singapore itself is still a AAA rating. So that's the reason why now there's some funds coming to Singapore. Because Singapore bonds at AAA rating, Singapore bonds pay about 2 or 3%, I can't remember. So this is a good thing. The property market will have issue, but it will not be badly hit. So don't go and sell a HDB flat or a condominiums here. Don't do that. But the more expensive landed properties, right, will be hit. Why? Because those properties are all bought by the mega rich people or the wealthier people, right? When the own country get hit, example like China or other countries, right, they will likely be selling the properties here to just, send the money back. And this will get the effect on this. Yes, it will affect. definitely, but not the local scene itself. But definitely there will be some impact, that's for sure. Yeah. Okay. So now the thing is this, Kel, you have been calling for technical recession. Why don't you use the word? Why don't you use the word recession? And why you keep on using the word technical recession? Because the word technical recession means that, right, it is a recession that is based on numbers, but you don't really see the impact. Yes, why again? Because you can see right now, right, we are not at our crazy point where everybody is buying stocks. Not in Singapore, but in US it is. So you notice this every time when this number start to surge, right? Okay, you can see the things have to move out, right? You can see that that is always a recession. Now, the thing is that this number have surged quite a fair bit from 3.3% to 4.2%. It's a decent impact. But do you see people still enjoying their food in restaurant? Yeah, we're still enjoying our food in restaurant. We're still moving around. We still go fly around. So the pinch is not going to be the same impact like what you have. So it'll be a punch in the face, but you don't get a big, you don't need to be warded without feeling yourself. It's painful. Why? If you buy stocks right now at a high price, the next 6 months, the share price goes down by 15%. You'll be very painful for you. And you do any leveraging or you basically over leverage yourself in your financial exposure, then yes, that will be impactful. But it will not be the same thing like what you see in 2001 or 08 or 2020. No, I don't think so. You won't see it. So when will we see it, right? When will we see this full impact, right? I can tell you now. The full impact will be seen in 2026 and end of 2026 to around 2027. Yes, that means the real impact whereby people lose their jobs, really lose their jobs, is in late 2026 to 2027. Now, why is that so? Again, it can be calculated. Because, right, when the economy itself, right, okay, really get strained is when you really see people get unemployed. But the next few months itself, right, is only a basically overvalued stock market. It will not create a recession. So what will kill in a recession is that when there is a super inflation whereby price goes so expensive, then people really cannot afford. And then after that, then people will lose their job. Then when that all, the scenario, that the whole thing come together, then we'll see that impact. So no, this time around, we won't see it. It's next year. It's next year, end of next year. So then we'll see the full impact. Yeah, so that's why I say this 6 months, you try to make as much money as possible. Then you benefit from the inflationary move. Then after that, when you amass a good wealth, then you will notice your friends around you will be affected. Then it's where you can lend a helping hand to them as well and stuff like that. So all clear? If you're still with me right now, are you clear on what I'm trying to say now? Is that I'm saying that there will be a stock market pullback from now till the next 4 months. Then after that, there will be a good massive rally with inflation all the way until end of 2026. And when the inflation is so high, everybody start to realize that we are in a very, very bad position. We will lose our jobs because the thing is too expensive, and then the company will shut down, and then after that, you will have your full-blown recession. And that will be the full-blown recession that I'm talking about. Okay, so that's a technical and a full-blown. The full-blown is 2026 and 2027. All right, so all clear. I hope that I don't confuse you as well, yeah? Kelza, can you comment on interest rate next year, 2027? The interest rate will go down, all the way down to back to 1% again. Because Jerome Powell will likely cut it down to 3.5% during his term from now till May, unless he's being forced. Then after that, Vicente or the lady will come in to take over, and she will cut the interest rate all the way down to 1%. And when that happens itself, that's where you have your mega inflation. And that's where I say already, right? The dot plot is all down there already. Yes. Okay. That's how it is. It will happen. Okay. All right. All right. Now, of course, you say, KEL, well, you talk much like you wrote the script like that. It's not there. It's just that when you look in the market for 26 years, right, you get to see this repeatedly over and over again. And of course, when the thing get a bit clarity itself, right, you can see how to perform from it. Yeah, so remember that, yeah? Let's continue. We are about halfway only. Okay. All right, so do you see that it's from 1963? From 1963 all the way, every recession will always see a uptick in the unemployment data. So that's why we are so much higher, but the market now is okay. Look at it yourself, my friends. Look at the uptick and the recession shaded area. The uptick that we are having now is so much greater in terms of the distance, not in terms of gradient, in terms of distance. But why are we not in recession? Because the USA say no happen. But we can see that the GDP numbers have gone negative. Yes, the last GDP number is negative already, but they tell you that it's okay, it's not really a technical until the next quarter, right? So that's why I say the next quarter, it will be the second quarter, the GDP will be negative. It will be negative. Why? The S&P 500 is not performing. That means imagine this, there are 500 S&P companies. Now, S&P got 500 companies, right? Okay, they represent the top 500 companies of the entire fleet of 11,000 companies of the US market. Okay, the listed company, the top 500. Now, the top 500 is telling you now their yield is 1.2%, while the inflation right now is at 2% based on the Federal Reserve number. If the yield is only 1.2 and the inflation is 2.2, which is bullshit, of course, but never mind, we take it as the number. How can you cover your earnings? If your yield is 1.2 and your inflation is 2.2, you will get stagflation. And because of that itself, right, if the S&P shares do come down due to the market breadth that's poor, this 1.2 will go even lower. The S&P now is holding up because of the 7 magnificent shares that's holding the S&P. So that is why now, right, although this unemployment data is surging, but because S&P now is at a high, people don't feel the thing. They don't feel it. They don't feel it. So that is why I say there will be another massive rally later on after the next pullback. All right, this is going to be a crazy time itself for all of us. So take a look. This is the unemployment rate, but reverse, reverse, take note, versus the US truck sale. Now, US truck sales is a very simple thing to understand. When the truck sales are not moving, that means manufacturing, transportation, logistics is not moving. Property price goes down, people won't buy, there'll be no constructions, lesser people traveling, lesser people moving around. So look at it, my friends. Look at it, the black color one, the one in black. The one in black shows the truck. Look at the truck sales is dropping. And truck sales, when it's performing in a very healthy situation, is always a linear upside. But when it's reversing in this manner, it's 100% confirmation of recession. So don't tell me that you cannot see this is coming down. You have to be kidding me. And because the unemployment rate is reversed, I mean, they flip the chart opposite direction to show you, right? You can see that the unemployment rate itself is also reversing. So which means that right now, right, the unemployment data is already confirming the recession. It is. So that is why Donald Trump understands this. That's why he keep on implement the tariff against everybody, because it's the fastest way to get money now. That's the fastest way. Okay? So the thing is right now, right, guys, we are definitely going to see a recession, a full-blown recession by 2026. A technical next quarter, a full-blown next year. Okay? All these you can, don't need to see, because all these are from Bloomberg. All right, it's just that how a person interpret this itself. And I'm interpreting to you exactly what it's supposed to be. Because you can see right now a weakening in the job market and a perceived rise in recession is always there. It's a very simple corroborated decline in the high-level economy data and also the thing. So that's why now we are very, very certain that, right, some countries itself, right, will suffer quite badly. So we want basically CRAZII to go into the picture and then help them to have another income on the side. Because put it this way, If your boss is going to pay you money and you had to feed your family members, I'm so sorry that you must have a second passive income to do it. But then what can you do if you have any skills of other thing else? Like myself, I don't skills of I can't repair the chair, I can't repair the lights. Then of course, then I short the market then. Yeah. Then when the market is supposed to ask me to buy the Bitcoin or buy the Dogecoin because I know that Donald Trump will push up the cryptocurrency market, I follow through. So I basically make money from the downside and then use the money to buy on the upside. So that's how I see it from my own self. Yeah. So now take a look, guys. The household now is also crazy. Look at it. The US household now is holding equities at a very insane level. So which means right now, right, stocks are very high in valuation. And then the bond yield now is definitely more than equity. All right. And the thing is the largest single holder, the US household sector, is more overweight them. So which means right now, right, many people in US is holding shares. And the thing is this, the Shiller S&P critical adjusted P ratio is actually below them. So which means that, okay, that the household are holding on losses. So the moment the S&P do come down badly, the household will literally give back all this money back to the market. They will sell it at an alarming speed. And we know retailers, when they sell, right, they don't care. When the market is coming down, they sell. So when they sell, that's where the big boys will come in to buy. So that's the reason why I say we are now in a very, very good risk ratio positioning to maximize this potential gain here itself. All right. So now the S&P 500 relative to the GDP, oh my goodness, we are now since 1947 to today, 2025, we are now at the extreme level. Gosh. Now, I mean, put it this way, if you are looking at this chart right now, it will be very, very silly to tell me that now is a good time to buy and hold. I think that will be off my scalp, on my head. I think that this is where you are going to expect a very poor return in the next 10 years. So I tell you this again, let the market fall, buy it cheap, and let it rally again. Yes, this will happen in 2026. Yes, right, that's what we should do. Huh? I thought you would say it's right. Yes, I understand. I'm trying to say, I'm telling you this right now. Once the market pulls back, buy here massively, then go and let it run to the sky until 2026 and to 2027, first quarter, second quarter. Can you understand this? If you can understand this, can you please put the word yes? If you understand this, please put a yes or no, yeah? Because I don't want you to be confused, no? Because some people say, it's like, what are you talking about? You sell, then you buy, and then you buy, and you sell again. What am I talking to you? Can you understand? Oh, very good. A lot of you can understand. Oh, fantastic. Need reminder. No need lah. No need reminder lah. You all know what to do already. Okay, this is something that I want to share with you all tonight. Very, very impactful stuff, right? Oh, we are at 3/4 level already. Don't worry, we're 3/4 level, yeah? Okay, now this is my personal favorite indicator, the Buffett indicator. Now, Buffett indicator itself to me is very, very good to use because it's a simple using the stock price of today divided by the market cap of to the GDP ratio, right? So once you do that itself, right, it's very clear to understand that we are definitely at a very high level. But this time around, it's more than that. It's not at high level. It's a historical high. Oh gosh, historical high. My goodness, guys. I'm 47 this year. Okay, I've never seen a stock at a Buffett indicator in the past. And now today, we are now at the historical high. We are standing at the epicenter, the highest level of this indicator, and you're still going to be buyer, then you're kidding me. Okay, you're really kidding me. Okay, so where are we right now, my friends? We are at 209%. Oh my God, 209.5%, significantly overvalued. Really? So let's take a look at this number right now. Okay, guys, take a look, yeah? Look at it. This is the Buffett indicator historical chart since 1974. And look at it right now. We are at the historical high. Oh gosh, at 209.5. The last time we saw this, if you can remember, it was here, my friend. That was December last year. And if you remember, that's where the stock market came down by almost, yes, 10%. The last time we see this again, that was back in August 2021, and then the market came down by 25%. Now, if you go back further down to the last time, this is the peak back then, that was back in January 2000, the market came down by 35%. So guys, are you kidding me? Now, I know that by saying this is all right, I'm not going to be well received by all my other similar trainers that are doing value investment. Now, I repeat myself once again to make sure that we don't have a conflict here. I believe that the value investment will be very valuable to do in the next few months. That means that the market go down again significantly. The value investors should come in and buy and hold and let it run like crazy. That's my point. I'm not saying that now is not the time to buy. I mean, I'm not saying that value investment now is a bad time. I'm just saying that now is not the time to buy, but let it drop first by 10, 15, 20%, then you buy from the bottom. Yeah, buy from the bottom. And then let it run. Let it really run. Okay, you can see right now that this is the chart right here, the GDP chart, solidly, wow, single file. The total assets now is coming down. Yes, this is the assets coming down. Okay, this is where the Federal Reserve now are coming down, right, in assets form. So they are preparing themselves to buy another $2 trillion later to bring it back up again. They will have the money, don't worry. When the market crash, they will have the money to basically come back to save the day again. That's why I say this, the next rally is going to be a massive rally. So crazy that we can see the S&P hitting 7,000 points. That means the next rally, the S&P 500 will hit 7,000 points. The next rally. No kidding. You can put it there. Today is what day? Today is the 6th of July, right? 2025, right? You can sign off here as well. I can tell you that the S&P will come down first, then find a base, and the next rally, okay, we'll see 7,000 points easily for S&P 500. Easily. Okay? All right. So this is something that I can take a picture of this myself, yeah, to write down to see whether I'm correct. Okay. All right. So that is where I'm saying will happen, yeah. But of course, I leave it to you to decide. Okay, let's look down further ourselves. Okay. So this is the formula for this, and you can write up on here and stuff like that. Now, this chart, this website is quite good. It's called buffettindicator.net. There are other things to watch. I mean, there's other charts over there, but I have no time to do all these things today. So just give you a taste of it. Okay, let's continue. Yeah. Okay, so now, oops. Okay, so this is to show you the Wilshire 5,000 to GDP. We're now definitely at the highest level, highest level, most expensive valuation. I repeat, most expensive valuation in history. In history. So if you're still going to buy stocks tomorrow, I wish you all the best. Now, I really wish you the best. Maybe the market can push up another few more days for you. I don't know. But I definitely will not be buying shares. Okay? I definitely won't be buying shares. All right. So what will I be buying? I'll be buying some VIX. Now, this is the VIX cash market. The VIX cash market now is about 16.38. Okay, it's a very good level if you ask me itself. All right, and the downside potential can be as low as 11. The lowest can go is 8. So in short, the lowest ever in the history is 8, around there. So if you talk about downside, potential downside itself, right, I think it's very difficult. Because for the thing to go down to 8, you're talking about the market must go to about 8,000 for S&P 500. I don't think so, right? Not so soon, right? So I don't think so. So I think VIX can buy. Now, if you're using AIMS to buy, right? AIMS itself right now, the VIX is trading at about 18.33. 18.33 now for the VIX. And you look at the VIX, the last 3 times when VIX hit about 17.8, right? The market shoot up, market shoot up, market shoot up, market shoot up. All right, so that will be easily a $300